go. Welcome, you're listening to the Best of Investing on News Talk 910, sponsored by Pacific Trade Exchange, your best in exchange trade. Check them out at pacifictradeexchange.com. This is the show where we present valuable information about real estate, the financial markets, and other economic business of the day. For those of you listening for the first time, here's our format. A few guys sitting around a bar having drinks without the drinks, talking business with you, the audience, listening in. I'm your host, Edward Brown, and I'm pleased to have as my co-host Mark Hanf of Pacific Private Money, California's fastest growing private lender, and Robert Schiff of RPM Mortgage. Our phone number is 888-912-1190. Now write that number down, 888-912-1190, because you're going to use that number to answer the trivia questions for 3 vacations given away during each commercial break. That's right, we're giving away 9 vacations during this show. The vacations are sponsored by Lighthouse Resort and Marina, located 1 hour northeast of San Francisco. The vacations are free. Their only request, a $75 cleaning fee to cover housekeeping expenses. Their website is lighthouse4fun.com. You can reach them at 916-777-5511. And today's trivia theme is men who played women or vice versa in the movies. And you'll understand.
Where do you get these topics?
People send them to me, I don't know. Our website is bestofinvesting.com. Check us out on Facebook and YouTube by typing Best of Investing Radio Show. And we're also on television now. Comcast Channel 26 on Saturdays at noon and Sundays at 6 p.m. Don't forget to also record our show on a website called dar.fm. And a couple of housekeeping items here. Quick reminder again, World Wraps in Corte Madera and Santa Clara is still giving our listeners a free smoothie with purchase of a wrapper bowl. If you mention the Best of Investing, go there for lunch today. Best wraps in town, and don't forget to mention the Best of Investing for your free smoothie. Also, a few weeks ago, we had Stefan Piscano on our show, and his website, realbay.com, is now up and running. So check them out for free online real estate auctions. Now today we have an extra special guest. His name is Peter Lacour, and I've known him for many, many years, and he's going to be discussing municipal bonds with us because he is the muni bond expert. Peter,
awesome.
Welcome to the Best of Investing.
Thanks, Edward. Great to be here.
Good. Go ahead and just come right in and tell us, quick definition, what are muni bonds?
Well, I'm going to do a little municipal bond 101 here, just to start off. What is a muni? A municipal bond is a debt obligation. It's a lot like a mortgage. It's issued by a state, a county, a city, and they do that to raise money to fund projects for the public good. That would include police stations, fire stations, freeways, sewer and water, et cetera, et cetera. Some of the nuts and bolts of muni bonds, bond issues are as small as $1 million, or they can be well over a couple of billion. California general obligations, very large. They have a fixed rate of pay, a fixed maturity date. They're sold in multiples of $5,000. But the biggest thing with munis, by far, the most important characteristic is they're tax-free. So people buy municipal bonds for their relative safety.
Okay, and you
have to say relative nowadays.
Yeah, that's right. What are the yields that we're looking at for California munis?
On the short term, probably 2 to 3% on say 5, 6, 7 years in that range. 4 to 5 tax-free on the longer term bonds, and 6 to 8% in the high yield market, which those would include tobacco bonds, which are pretty fascinating little sector of the market.
Bonds, really?
Yeah.
Yeah, people react just like that with tobacco. Yeah, so.
Exactly.
What is a tobacco bond?
So what are they?
Yeah.
Well, actually, tobacco bonds came to being in the 1990s when we had all the litigation going on. Remember Marlboro Lights and constant lawsuits?
Yeah, sure.
Oh, right, the settlement, right?
Yeah, it was called an MSA agreement, the Master Settlement Agreement in 1998. This is when Big Tobacco settled the ongoing lawsuits with all of the states. It was pretty fascinating, actually, and the deal was Big Tobacco, and Big Tobacco would be like Altria, Philip Morris, RJ Reynolds, which is Reynolds America right now. These are excellent companies, actually. Altria is a $64 billion market cap company, pays a 6% dividend. So these are companies that are in high grade equity portfolios.
And plus one of them makes Purina cat chow, right?
Yeah, exactly.
Okay.
But so you're not talking corporate bonds, though. You're saying that that's a type of muni bond?
No, this was part of, to go on with the story,
Tobacco, yeah.
Yeah.
they had this settlement So in order to settle anybody who produces tobaccos, i.e. Altria, had to kick money into a pot, so to speak, and then those monies are doled out to the states on a pro rata basis. So depending on how many cigarettes you produce, you put that many money in the pot. That's divided up and paid to the states. So what did the states do almost immediately? They have this income coming in. Well, with all the fiscal budgets, everybody needs money. They're like, hey, well, you know what we're going to do is we're going to
borrow against an annuity. Okay.
Yeah, exactly.
We want our money up front, so they floated, issued bond issues that are secured by the revenue stream from these tobacco players.
So it's as safe as the tobacco
exactly.
companies.
That's why I'm mentioning Altria and the quality
so keep
of these
smoking
companies.
and keep our kids in school.
Yeah, exactly.
Well, some of these companies probably do a lot more than just tobacco, and that may be a minor percentage of their total work.
Absolutely. Well, the strength of the revenue stream, which is key, is just the quality of those companies. So the states go ahead and float these bond issues, and so in the late 90s, you had all these bonds come to market. There's currently about $40 billion of tobacco securitization is exactly what they're called. And
Let me ask you, what's the yield on that kind of bond right now?
well, when they came out, they were about 5 to 6%. And then what we've seen over the past decade or so is they've gotten cheaper for a number of reasons. One, supply and demand. There's 40 billion of them. That's a lot of bonds out there. Two, there's kind of a negative stigma with the bonds.
Sure.
Because you say the word tobacco, and I don't want anything to do with tobacco.
Yeah.
When actually they're almost, you could look at them as an anti-tobacco bond.
Yeah, 'cause
Right,
they-
exactly.
Yeah,
Now, are those bonds rated? Are they just rated low?
When they came out, they were investment grade. So investment grade is going to be BAA up to AAA. These were BAA. Recently, they've been downgraded below. That's another reason why they're trading a little
That's
bit
the
cheaper.
higher yield. Okay.
Yeah, what is the yield right now on an average?
Currently, the tobacco market trades probably between 7 and 8% tax-free.
Wow,
So-
both federal and California tax free?
Absolutely.
Now, are the tobacco companies' balance sheets safe enough right now? Are they paying? So far, you've
Yeah,
seen?
absolutely.
I mean, in other words, they haven't missed any payments, have they?
No, absolutely not. Well, one of the reasons why they're cheaper, as I said, one, the word tobacco, and people shy away from them. There's a lot of the bonds out there. And also it's tied to the consumption of tobacco. Now that was part of the agreement, the settlement. They figured declining smoking rates.
Yeah.
But they've actually declined even a little bit more.
Well, I know you were gonna ask a question about bankruptcy.
Yeah. Peter, bankruptcy has been big in the news as a muni bond risk in the last couple of years. How is that faring right now? Is there a lesser risk, or what's the perception there for muni bond bankruptcies?
Well, when it comes, first of all, Stockton has been in the news. That's what we've seen lately.
Yes.
And people definitely jump at that headline news, and that's it's the proverbial throwing away the baby with the bathwater. You really shouldn't jump when you see chatter about bankruptcy. We saw that actually with a very famous analyst, Meredith Whitney, came out a year and a half ago or so, talking about potentially multiple bankruptcies all across the nation. And that actually hasn't happened. But if you look at it, for instance, take Stockton. Stockton doesn't want to, they're not in a rush to go file bankruptcy, which, by the way, is Chapter 9. It's kind of an odd, it's not 7, 11, or 13. It's a municipal Chapter 9 filing. There's only been a few hundred in the history of the country.
Which we're going to get into the trivia on munis when we come back from break, because he's got a couple of interesting trivia questions that are kind of fun. So
Great.
we're going to have to go to commercial break right now. When we come back, we're in the studio with Peter Lacour, who's an expert in municipal bonds, who's going to be feeding us all this great information. And here is our first trivia question, and it has to do, again, the theme is men who played women or vice versa in the movies, all right? Dustin Hoffman played a woman in this 1982 movie. What was the name of the movie? The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. Dustin Hoffman played a woman in this 1982 movie. What was the name of the movie?
Why am I thinking chocolate?
Chocolate, no.
It's related.
It's related, yeah, really. You're cheating, okay. And call 888-912-1190. Make sure to include your name, your email address, and speak slowly and spell out each letter of your email address, and we will be right back.
Awesome.
Excellent.
No,
Okay.
That was
quick.
perfect.
That was
a quick
was
segment,
smooth.
and it went
Yeah.
good. You were great,
Yeah.
Pete.
See? Nice and simple, huh?
Piece of cake.
See, we forgot
Now,
to get
that
into
didn't
trivia.
feel
I
like
said
2
some cool-
hours, did it? It went quick.
Oh, yeah, so let's take off our heads off.
It goes so much faster. than
Commercial
you
break.
think it
You
will.
got,
Yeah.
got another little sticker here for you, my friend.
Oh, let's see.
I don't
It's
know,
just like
you-
I'm supposed
see
to do a
what we have
6-minute
today.
presentation
What do we have
at this
today?
conference
What do we
call
have
next
today?
Friday. So I write this whole thing out, and then I speak it.
It
It's like
gets
12
any
minutes long. It's like, I thought it was going to be like half.
Oh,
Or,
you fall
things
off.
always take
Edward
longer.
leg.
You like that?
Yeah,
Then you think
I like when you rip it off though.
Oh, yeah, well, I'll do, okay,
I like the
ready?
pain. Yeah.
Ah! You know, that's why I have a bald spot right here.
Yeah, you only rip off half.
I know, it always comes out like that. All right, let's see.
Yeah, you should try out for Tootsies or something like that. Tootsie.
Tootsie Rolls. Tootsie Roll, yep.
Oh, that's right.
That's right.
Tootsie.
Now, what was his name in the movie?
Oh,
That's a good
right.
one.
He had one of those names that was
That's a good one.
a man and then a woman's name.
Was it Alan? I remember his.
Oh, if you don't
agent
remember,
saying-
you can't
No, I don't
say.
remember.
Come on.
I don't remember his.
Pete, you
That's
remember?
Who was the woman playing next to
She's a famous woman.
Jessica.
Jessica Lange?
Jessica Lange.
Yeah.
That's right.
Was it?
Yeah, very good.
That was a good movie.
That was fun.
Great movie.
It scares me a little bit too much that he's that good of a woman.
Oh my God.
Reminds me too of when he played Hook. Remember Captain Hook in
Yeah.
Peter Pan?
It was good.
Give me some B-roll, guys.
Okay.
Oh,
So B-roll.
Jelly Roll.
You need some filler time.
Yeah.
Oh.
Filler time.
No, seriously, you
Miller
gotta go back
time.
to kindergarten.
Yeah.
You know that?
Wow.
Yeah.
Now, where
You
was
haven't
this?
changed a bit either.
No.
You were big back then too.
Where was this?
Mary Silvera.
Mary
School.
Silvera. Rimwood.
Wow.
Rimwood, Lucas Valley, Terra Linda.
So Peter, do you specialize actually in muni bonds versus, or it's just it's a big part of your
It's been a
sales
big part,
portfolio?
yeah.
Okay.
I started my career with munis, yeah.
And then what else do you have? You basically sell everything?
Financial advisor, so
Okay.
basically what people like.
Yeah. Do
Yeah.
you work independently or are you who are you with?
Securities America, independent.
Okay.
Guys ready?
Yeah.
Segment 2. Okay, we get into segment 2. Okay, we'd already covered the tobacco bonds, so we'll do that. We already covered the yields. We covered the bankruptcy. Get into the trivia, and then you want to ask about the rising inflation.
I was gonna ask about tobacco bonds, so I need a question.
Yeah, exactly.
Well, you can ask them about the inflation. How does inflation affect bond prices and yields?
Yeah, or how do you combat it, yeah.
Okay.
Trivia, inflation, what would you do? Get the bag lady in there somewhere.
Yeah.
I had all these good jokes. And now we're-
Well, I want to get him in there. So we'll do the, he says a funny story about the
Okay,
bag
good.
lady.
Well, it's
Okay, so do the
funny to
trick.
tell jokes when you're stuttering.
Okay, you guys ready?
Yep.
Sure.
Okay. Here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money, Robert Schiff of RPM Mortgage, and Peter Lacour of Securities America. When we cut to the first commercial break, we asked this first trivia question. Dustin Hoffman played a woman in this 1982 movie. What was the name of the movie? People?
Tootsie.
Exactly, very good. All right, Peter, we know that you had some great trivia about munis. Go ahead and share that with us.
Okay, I don't know if it's that great, but there
No,
are
it's
three
pretty
little
good.
nuggets here we can shoot out here. The first one is, what was the first municipal debt?
Anyone?
Oh.
That would be
See.
globally.
Oh, globally, let's see.
Ancient
uh,
Greece?
Yeah.
That's close.
Tiberius.
Rome?
It's not bad. Whoa, Rome,
Yeah.
Rome's
They
the
wanted to
winner.
build. They wanted to build the.
Noah building the ark.
Yeah.
Building a harbor.
Yeah.
Rome
Yeah.
wanted a harbor.
The
They
first
floated a bond.
The first municipal debt was the Renaissance Italy, circa 1500 or so, where the Italian city-states borrowed money from the wealthy banking families.
So it wasn't Da Vinci wanting to build his first airplane.
I think it was to refurbish
Okay.
the Colosseum.
The refurbished the Colosseum. Okay, next trivia.
Next one was was the first U.S. Municipal bond on record, and that
Municipal
one.
bond.
It wasn't.
Wasn't the Revolutionary War bond.
I mean, you would
so
think
it
that
was-
that would be it.
1812, New York City general obligation for a canal water project. So-
That was
It's actually
before.
not
That
that
was
long ago.
before the British attacked, I guess.
Yeah, for the war of 1812. Yes. Next
And then
trivia.
the last one is the first widespread municipal financing on a real major basis. I'll just go ahead and say this one was for the railroad systems all across the U.S.
That makes sense.
So that was a.
Okay. Now, you told me earlier, and these guys haven't heard it yet, the story about the bag lady. Share that with the audience.
Yeah, I had a funny story. A good friend of mine owned a bond brokerage, as a matter of fact, here in Larkspur. And he told a story about the bag lady who strolled in his office, you know, an elderly woman. She was kind of disheveled and certainly quite odorous.
Odorous.
So
She smelled.
she smelled, she was staggered in and had this big, giant, Glad green bag, and it was full of something, and, you know, he was kind of curious of what that might be in there. So anyway, he rushed over, can I help you? Information, what do you need? You need the restroom? Can I give you a lift? And she looked at him and said, yeah, you can give me a lift. You can lift this big bag over here on your desk, where she plopped it out and emptied over $1 million of bearer bonds.
Oh, God.
And bearer bonds are.
Bearer bonds are securities with no identification. So if you're walking around with a bearer bond,
Just
don't
like
go in a
cash.
dark alley and
Yeah.
get mugged.
As good as
because
gold, right? Highly liquid.
It's ready to go.
Okay, I know Robert wanted to ask a question about the interest. or
We're in
inflation.
an environment right now where there's very low inflation, and how does the rate of inflation affect the bonds?
Well, as far as low rates, and when they do eventually go up, they're cyclical and they're going to go up. Or really, what you want to look at is how you can hedge against that, against rising rates in bond portfolios taking a hit. And the easiest way is just to shorten up on the maturities. You can ladder your bonds when you buy them, so that constantly you have different blocks coming due and rolling over into the new higher interest rate environment. There's also plenty of ETFs nowadays. TBT is one that is short treasuries.
Wait, hold on, Robert's got a question.
What's an ETF?
Exchange traded funds. They're actually
Almost like a almost like a mutual fund, right?
Exactly. Yeah, they're very plentiful now. It's becoming a much bigger market. They're not quite fully efficient, frankly. So you have to watch that. But if a person has a large bond portfolio, there's lots of different ways you could hedge it. You know, buy gold. So we'll see. And plus, rates aren't going to go up overnight. We just had the Fed a couple of days ago said we're talking 2014 before rates possibly would rise. A couple of the fellows even said 2016.
Wow.
And even when the Fed meets 7 times a year, so even if they were to raise rates consecutively, you might be looking at 200 basis points, 2 percentage points higher.
Yeah, because
that'd be
usually
3 or 4 years
quarter to
out.
half
So
a point, they don't do too much.
and who can predict anyway? Actually, I heard a quick joke. I actually heard this from Mitt Romney the other day.
Okay.
It was kind of interesting. He quoted Yogi Berra, and I'm a big baseball guy.
Yeah.
They were. He was talking about predictions, and Yogi said, "I hate making predictions, especially when it has to do with the future."
That's right, exactly. Hey, do you have a favorite bond right now? Anyone you specifically like?
A good quality bond, ones that right in the 5 to 5.5% level that doesn't have delinquencies. I mean, you're looking at quality right now. It's the utmost thing. As we haven't got into the bond insurers, but the bond insurers have all pretty much gone down the tank. So when you're looking at a bond, you're looking at the underlying rating, which means the standalone rating, and that's what matters. So actually, there's so many bonds out there.
Well, I remember that with the insurance. It used to be that, we could tout that we had insurance for the bond, but now the insurance companies had problems, didn't they?
They had big problems. The insurance companies made all kinds of money just going about their vanilla business of insuring municipals. What happened was the other side of the business is their securities portfolio, and that typically insurers keep short-term money, T-bills, nice safe stuff. But to keep up with the Joneses or keep up with the Browns, for you, Edward, they started getting into, I kind of call it the crazy paper. They started getting into what turned out subprime mortgage paper, and also kind of made a spicy stew. They added derivatives and credit default swaps, which I won't bore the audience with.
Mark, that's your favorite thing, credit default swaps. I order that for lunch every day.
Spicy.
So anyway, these bond insurers who are making great money just insuring municipals straight on basically tanked their businesses on the side by getting into all this paper that blew up. This is basically the paper that was at the center of the whole meltdown that we just experienced.
Sure.
So these insurers that used to Standard & Poor's, which we'll save that for another day, the rating services, would rubber stamp them AAA. The insurers were either bankrupt or a lot of them are, say, B- rated or something. And when you're in the insurance business, you're as good as your rating. If you're in insurance business
sure.
and hey, I got a B rating over here, it's no good. So it's key right now. In fact, when you look at ratings on bonds, they'll have one column that kind of has the standard ratings that every bond people are used to looking at. And then on the other side now, it's called the underlying ratings. And that has to do on standalone strength of the municipal itself. So in a way, it's kind of good. It's kind of washed out any of the questions. So when you look at a bond, the underlying rating means exactly what's going on with the bond and what's its strength as far as paying its bills.
Yeah, rather than just looking at any old bond and just going, oh, well, that's okay, don't worry about it. You got a big insurance behind it.
Or the rating was done by a company that has their hands at both sides of it, so
Yeah,
the rating
yeah.
might have been.
Well, that's a real interesting thing because the ratings, Standard & Poor's and Moody's, and not, they're great people there, but these people were exactly the ones that rubber stamped AAA on all the crazy paper I just mentioned,
Yeah.
all of the derivative nightmare paper that was out there. They said it was AAA. I remember 60 Minutes a couple years ago did a piece, and they were interviewing some mayor in Iceland or wherever it was, and she was, it was the U.S. mortgage paper, AAA, and
Sure.
and
Well, I remember years
so these
ago-
rating services, you take it with a grain of salt.
Well, I remember, talking to municipal bond brokers years ago who said that, of all the bankruptcies that had happened with municipal bonds, 95% of those were AAA rated. I don't know if that's still the case
Wow.
now. So it's like, you can't just go with the old AAA.
There's
rating.
barely any AAA bonds now at all, which is really, really kind of fascinating. There's,
Wow.
Stanford University papers, AAA, but there's virtually none really.
Well, Peter, thank you so much for joining us in the
No
studio.
problem.
You guys hang around. We're going to go to email time. Before I forget, though, how do people get a hold of you if they have more questions about muni bonds?
Best way is just to call me at Peter Lacour at Securities America at 800-900-6033. That's toll free, 800-900-6033.
Okay. And last week we had a special trivia contest question that we said that we were going to ask today. So,
Indeed.
first of all, let me tell you the special giveaway is going to be 2 nights at the Vichy Springs Resorts, and the Vichy Springs is the best of 2 worlds, a country inn and hot springs resort with 26 rooms and cottages that include their world-famous naturally warm and carbonated mineral baths, hot soaking pool, hold on, it's hard for me to read this and not just imagine being there, Olympic-sized swimming pool, and 700-acre private reserve for walking and exploring. Breakfast is included, as all resort activities. Vichy Springs is just 2 hours north of San Francisco and 1 hour north of Santa Rosa in the North Coast wine country. And here is that special trivia question. All right, name the 2 days of the year where no major sporting events are going on. Here are the rules. No previous winners of prizes on our show are eligible, and you must email edward@bestofinvesting.com the answer by midnight tonight, and their winner will be chosen next week from among the correct emails we receive. And we're going to cut to our second trivia question commercial break. In the movie Shakespeare in Love, she sometimes pretended to be a man. Who was this actress? The first 3 callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Their website is lighthouse4fun.com. Call 888-912-1190. That's 888-912-1190 to answer this question. In the movie Shakespeare in Love, she sometimes pretended to be a man. And who was this actress? Remember, the theme is men who played women or women who played men, vice versa. Call 888-912-1190. Make sure to include your name, your email address, and remember to speak slowly and spell out each letter of your email. And we will be right back. Great.
Awesome.
Now, do you know those 2 dates?
I
can't
don't
imagine.
know.
February the 29th, 3 out of every 4 years.
Oh!
That's what I was gonna say, February 29th.
No major sporting event on that day.
Good boy, Robert.
What, how do you define major?
Anything except, what's the Canadian thing with brooms?
Curling.
Curling.
Yeah.
We always have to have a curling question once a month on the show.
Which is better, lefty or righty when you're curling?
That's a pretty good question.
Well, the 49ers did that. Vernon Davis was a big curler.
Really?
Yeah.
Really? For which country?
Yeah.
Well, last week we had Paul Kingsman, a friend of mine who was an Olympic swimmer for New Zealand. And because New Zealand, you know, how many Olympians do they have, right?
Right,
So he was
tiny
a
little
national
country.
hero. It's pretty cool.
Although what's the, it's Auckland, right? Auckland? No, yeah.
Well-
Auckland, New Zealand, but I guess we've been twice. It's like San Francisco.
It's like just like I know. It's amazing.
Just like
It's
same
just like
weather.
San
It's
Francisco.
just opposite.
It's like
because
San
they have-
Francisco was in the 50s.
Yeah, it's actually cleaner than San Francisco, and they don't
How long
have the
ago were you
homelessness.
there?
2000.
Okay.
And,
Because it was pretty dirty when I was there in
I was there like
1994.
Yeah, no, I was there in 03, 04. I was actually there for the America's Cup when they were.
Are you
Oh,
big
neat.
America's Cup?
No, but I just
Oh,
happened
you
to
happened
be
to be there.
And
I just went there for the Globe
And I
Wars.
was invited out onto a yacht, and I looked over, and there was
Oh, how
this
exciting.
supermodel on the yacht next to me. And I can't remember her name. She was hanging out.
Couldn't have been that super if you can't remember her name.
Oh, you know when I.
You remembered how she looked.
Yeah, that part you never forget. Like when we had Kathy Ireland on, you know?
Right.
Pretty simple, huh?
Yeah.
See, and you did really well, but it was just, you know, just getting into the stories. It was terrific.
Good.
Okay, and so if you don't hang around, we'll do email time here.
And he's remembering to have film.
Yeah.
Doing great.
What'd you say?
You're even remembering to bring film.
Oh, I knew I forgot something.
Okay, we're gonna start
How about-
all over
How about
again.
tape?
You ready to start all over again?
Oh, 3 seconds. Okay.
Ready?
Yep.
It's back
Your
on?
timer.
I don't have my little. I'm wearing it. I just figured. Okay. How many minutes on this one are we gonna go to?
Yeah, go about 10, then shorten up the other one.
All right.
You guys ready?
Hit it.
Let's hit it.
My low tech timer.
You know what that comes from?
Hit it.
Yeah. Where does that come from?
It's not Animal House?
Yes, very good. Otis Day and the Nights.
That's right.
Let's hit it.
Yeah, that's right. That's good.
I like that because
It's
I'm
Otis.
studying primitive.
Otis, my man.
Yeah, that's right. I'm studying primitive culture. Ooh, bow, bow.
That's Von Leibowitz.
That's my next trivia question. Who in the Animal
Fawn
House? Who was the
Leibowitz.
girl who supposedly was the girlfriend? Love that movie. Okay, guys ready?
Yep.
Here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hanf of Pacific Private Money and Robert Schiff of RPM Mortgage. When we cut to the second commercial break, we ask this trivia question. Again, the theme is men who played women or vice versa. This is a vice versa one. In the movie Shakespeare in Love, she sometimes pretended to be a man. Who was this actress? Anyone?
Maybe,
Gwyneth
Gwyneth Paltrow.
That's
Very
right.
good, guys. All right, we're going to get right into email time here. And Robert, we have a question for you. When you meet a new client, do you take a deposit to start the refinance project? This must be from someone who's ready to call you.
Well, that's a good question. I don't, and even more than that, legally, mortgage brokers are not allowed to take upfront money from people.
Why is that?
It was one of the things that happened after the default swaps turned the market completely. There were so many abuses that the government came in and said, we have regulations now, and if you're looking to borrow money, you go to someone and they are not allowed to have you pay them money until the process is started, until you can see clearly, you get disclosures from them and find out exactly what the terms of the mortgage they're offering you.
Yeah, because at some point, you could be going through the process, and they could be wasting your time.
Yes, now the banks can still say, we want an upfront fee which will cover the appraisal, and if you don't go through with it, then they keep the money.
Well, now, so when they go through you, and you start going through the process.
I tell people if they come to me, the only money they're gonna spend until the loan is done is money for the appraisal, and that'll only happen on almost all cases after they're disclosed, and we go over all the terms of what they're gonna get and what they're looking at and what the costs are gonna be.
I think that's a great idea too, because there have been a lot of abuses. I know that there's still lenders out there that will charge you like a legal fee deposit, or maybe they'll send you a letter of interest and say if you want to proceed, you have to send a quote legal fee deposit or something like that. And really, it's I just think that's nuts.
Well, there's too many scams out there.
Yeah, you always get the call, this is an emergency, you need to call this number by the end of the day and deposit $500 to secure your, well, we're not even sure what it secures, but no, the answer is there's no upfront deposit at all.
Okay, good. Mark, we received an email for you here that says, here's a question. Do you have any success stories about one of your clients foreclosing on a loan? Now, you have to explain what that question means. It's obviously someone who's familiar with your company.
Right, for new listeners, my name is Mark Hanf. I'm president of Pacific Private Money Loans. We are a private money mortgage broker, meaning that not only do I have borrower clients who are mostly real estate investors, that's the niche market we serve, but I also have lender clients, individual folks like you listeners out there with self-directed IRAs or savings accounts, however you invest your savings. There is an investment market known as trust deed investing, is what it's more generally called, and that's when you fund a loan secured by real estate, secured by a recorded deed of trust, hence the term trust deed investing. Again, these loans are generally here in the Bay Area, definitely in California, but mostly in the Bay Area, secured by real estate. These are short-term loans to real estate investors, many of whom may be buying property to fix and flip, so maybe it's a one-year loan, or we do have 2- and 3-year products, but generally short-term, you're not tying up your money for a long length of time. So the question was, well, what about the default rate? Has any interesting stories on the default side of things? Well, first of all, what's really interesting is that historically, a private money loan, which used to be called a hard money loan. It's kind of the softer, easier, more PC name for it today is a private money loan, but it used to be called a hard money loan. And hard money loans back in the day used to have a fairly significant default rate, 5%, sometimes higher. And if that loan is well secured, a default is not necessarily a bad thing. It just really means that, well, you're not receiving interest payments during the period of default. If you file default and go to foreclose on the property, you in theory could end up owning that property and making a much better return on your initial investment. But nowadays, most of my investors are really not interested in loaning to own, as it's sometimes called in our business. They really want to invest in this secured product, receive their 8 or 9%, sometimes 10% monthly interest yield. It's an annualized rate when you get your interest monthly. And they don't want to have to foreclose on the property. But we did a loan 2 years ago to a gentleman. And this was a well-secured loan. He owned a rental property here in the Bay Area. He wanted a cash-out loan. There was an appraisal on the property. We made him a loan equal to 60% of the value. Well, that guy promptly, within 30 days of us funding that loan, don't know what he did with the money, but he ended up getting arrested. Apparently, he was running a Ponzi scheme in another venue of his life. He was collecting money from people, promising high returns. Now, the loan we made to him was a legitimate secured loan, so my investor was not at risk. But as the borrower was in jail, he didn't make any loan payments, so immediately.
Well, wait, that's no excuse. Just because he's in jail, give him a checkbook and start writing checks.
Right.
Just have to find another job while he's in
Yeah,
jail.
yeah, exactly.
So he missed his first payment. 30 days after the first payment, my lender instructed us to file a notice of default, which we did. That triggered the default rate of interest. So the interest that he was receiving, which was 10%, now was 14%, because we have a 4% spread in the default rate of interest.
But he hadn't received it yet because.
He hadn't received it yet,
Yeah,
right.
he's just accruing at
So
this point.
it's accruing at that point, and late fees were accruing. So the story ended up with a happy ending because the property was put up for sale by someone, a relative, and it actually was sold within 6 months. And the happy ending for my investor was that when we put in for the payoff on that loan, known as a reconveyance, we put in for the accrued interest at the default rate, the late fees, as well as getting reimbursed for the $2,500 he was out of pocket to file the foreclosure, which we paid a third party to do that. So he got all his money back. He ended up making an annualized rate of return of over 16% for that investment. And because he was a fairly seasoned investor, he never broke a sweat.
Yeah, I was gonna say, because that's almost like, that's the worst news,
So-
the best news.
So now he's asking if you have any properties that might go into default.
Yeah, there are any guys who are about to go to jail that you can let them borrow?
Mark, is my understanding correct? If that had gone through and he had foreclosed, then he would own the entire property where.
That's 60%.
Where for 60% of its value.
Well, he would either own the property, or what happens is when you foreclose on a property, let's say there is a lot of equity, when it goes to the courthouse steps, known as the trustee's sale, you actually have to post a price, and that price would be equal to everything you're legitimately entitled to receive. So that could include late fees and default interest, etc. So it's possible, if there were sufficient equity, that a real estate investor would bid at the courthouse steps and buy that property. So you'd still get everything you were entitled to, but you wouldn't necessarily be guaranteed to own that property. So again, not necessarily a bad thing. You're getting cash. You don't end up having to take over possession of the property and maybe repair it or reposition it for resale. But
Okay, so in his case, if it would have just been normal, he would have received 10%.
Yes.
But because it went into bad territory, he ended up getting a 16% annualized
Wow.
yield.
Well,
Not
and
too
we were
shabby.
we were talking about bonds earlier. I mean that's one of the unique features of trustee secured loans or note investments is that it's really it's financing. It's not really. I mean, we call them a trustee investment, but technically it's not investing. You're really lending your money out, and the hallmark of lending is security and insurability. Whereas if you buy, say, common stock, even if you buy from Apple, and Apple's a pretty strong company, it's not guaranteed nor is it secured, so that value can still go down. There's not a whole lot you can do. Whereas in, well, of course we know real estate can go down, but we'd like to think that the air's been let out of that tire, and we're not going to see a whole lot more. And of course we'll be talking a little
So
bit about
tell the
that.
listeners, how do they get a hold of you if they want to get a decent yield? We can't
Yeah.
promise them 16% because you never know if the loan's going to go into default.
No, I don't typically promise 16%, although we are, there are some creative products that some of my more sophisticated lenders like to do. And of course, anybody interested in learning how you can lend your money in a secured position and make even higher than 10%, I'd love to talk about it. But my bread and butter, the most safe, the ones with the most safety and security features are first position loans. And no more than 65% loan to today's value. And anyway, you can go to my website, which is PacificPrivateInvestments, plural.com. That will give you information on trustee investing, pacificprivateinvestments.com, or of course go to the radio station's website, thebestofinvesting.com.
Very good. And Robert, how do people get a hold of you if they don't want to give you a deposit?
Oh, they won't give me a deposit. The best way is to call my cell phone, which is always attached to my hip, or unless I'm talking on it, which is 415-515-1941. And also you can check out the RPM website and go to RPM website and look for Robert Schiff.
That's revolutions per minute.
That's what it is.
We're going to cut to our third commercial break, and here's the final trivia question. This actor played Edna Turnblad, the mother of Tracy, the main character in this 2007 musical Hairspray. Who was he? In fact, I didn't even know this until someone actually pointed out to me.
Musical, really?
That's right, musical Hairspray. The first three callers with the correct answer win a free 3-day, 2-night stay at the Lighthouse Resort. Again, their website is lighthouse4fun.com, and that's the number 4.com. Call 888-912-1190. That's 888-912-1190 to answer this question. This actor played Edna Turnblad, the mother of Tracy, the main character in this 2007 musical Hairspray. Who was he? Because this was on TV. I mean, it was in
This
the
was a
movies.
remake of Hairspray.
I believe that's correct. Okay. Make sure to include your name and your email address, and remember to speak slowly and spell out all your information for us, and we will be right back. Excellent.
I don't either. Yeah, no.
Smooth, you fellows are smooth.
Anyone know the answer to this one?
Nope.
No.
I know that you know this actor.
Boy? Girl?
Oh, it's a boy.
It's a boy.
Right? Gotta be a boy, because he played a girl.
Oh, okay, got it.
It's not Jack Black.
2007?
2007. Famous actor.
And I'll know it when you say it.
Yes.
It's not Brad Pitt. It's a musical.
Rob Lowe. I don't know.
But he has been in at least one other famous musical. People, come on. You're the one that I want.
John Travolta.
John Travolta.
That's true, that's right. That's right.
He was in the remake.
I thought that was like they put on a fat suit and everything.
Yeah.
It was
Yeah.
really-
And he really looked,
Yeah.
he did a good job.
Yeah.
I think it was just something he just wanted to do. Oh,
He's
play a
great.
woman. Yeah.
I want to play a woman.
There's a lot of good music in that Grease.
Oh, it's really good.
Yeah.
So we can get into some
Oh, yeah.
RE banter for the fourth. Peter, you should probably jump in and I just I can just talk about the markets.
Where are the markets?
The market's strengthening and and the news behind the news, which I like to do about the fact that the latest report says, oh, real estate's down 4.5% year over year. Leads and leads, right?
Any other economic things specifically to talk about?
What else?
What's going on?
GDP
Andrew?
this morning.
Where the stock market.
2.5%.
Stock market's going, or what
GDP?
are we looking at globally?
I didn't read that, so.
2.5%.
And that is the adjusted first quarter? Or is that the first release for the first quarter?
Yeah.
It's the
First-
first quarter, and it
first
was
quarter
3%
release.
last time, so it's
Yeah.
2.2%. I read something this morning that said that the
Is that expected or better than expected?
GDP of America is
Right about in line.
something like 30% of the GDP for the entire world. It's bigger than China and Japan and some other countries put together.
Wow.
The GDP of America is about a third of the world GDP.
Hmm.
A third, see, I didn't know that, really, we're 1/3 of the
Well, it
world's
might have been a
GDP.
quarter, I'm stretching it already. Scroll.
We like to exaggerate around here, yeah. Nearly a
Actually, I
third.
got a kind of interesting trivia. I was talking about low interest rates and Fed fund rates.
Yeah.
What do you think the highest rates peaked in 1981? Where was Fed fund rates then?
16.
16?
Well, wait a minute.
19.
I was going to say that the prime went
Oh,
down
the
to
overnight?
20 3/4.
So
That
the
part I
overnight.
remember.
I'll never forget this woman built a spec house and was trying to sell it, and I walked in on her first open house and she was telling this client, and the really good thing about this house is there's a mortgage that's assumable for only 17.5%.
Yeah, that's amazing.
When I got
Oh,
when
my gosh.
interest rates, industrial bond financing at 7 3/4 because interest rates were normally 13%. I go, man, I gotta.
I remember when
jump
that
on
was
this
free
7."
money, and I was like,
Yeah.
7%.
Yeah.
Oh, yeah, I remember, I was a realtor.
We got, talk about advance.
13%.
Yeah, when talk about advance fees, we got burned for 20 grand by a guy who came into our office and smooth talked us out of deposits for loans secured by Chinese money coming in at 7% back in the early 80s when the rates were like through the roof and
Held by
inflation
the
was
Bank of
12%.
Helsinki.
Yeah, right. He was so convincing that
Wow.
my dad literally wrote a check right then and there for $20,000
Well, I
good
had-
faith deposit and
Hate
money
that
never
stuff. I
came.
hate that stuff.
Yeah, I know.
There was a guy who came to us for a loan one time. He just showed up at the doorstep. It was the
Yeah.
funniest thing. He just shows up and you go, "Do you have an appointment?" I mean, not that we needed one, but
Right.
he goes, "Nope." He goes, I heard about you guys, and I'd like a loan for $3 million. And we said, okay, good. We do
Sounds
do
good
that.
so far.
Right, so
Yeah.
I'm
Might
my
be the
ears
bag
are-
man.
I'm interested, right? He says, and here, I've got $100 million portfolio.
Oh,
100 million, 100 million.
100 million, okay.
And so, you know, I'm kind of looking through the papers, and I'm getting a little suspicious to begin with, right? And so we're talking, and he's explaining how he needs the money for such and such, and I said, okay, just so you know that we do, and I said, we always get, you know, personal guarantees. I was like, oh, no, can't personal guarantee, you know, all personally guaranteed. I said, really? You go, you got $3 million against 100 million. I said, I mean, come on, of course you'd personally guarantee this. You wouldn't want to
Yeah.
lose this profit. No, I can't do that. I said, see ya. I go, we ain't gonna make it that kind of loan. No. All right, guys,
I
8
want
minutes
that.
and 35 seconds on this bad boy.
Okay.
Actually, GDP came in at 2.2. It was
2.2.
expected 2.5.
All right, so I'll get right
So I'll be
back.
quick, yeah, I'll make it quick and then we can, you know, dovetail into GDP and
Okay.
PG&E and whatever other.
Fed funds rate 19%.
That's right, Fed funds.
That'd be kind of a fun little trivia.
Yeah.
Okay, ready? Here we go. Welcome back to the Best of Investing. I'm Edward Brown, your host, along with Mark Hahn from Pacific Private Money and Robert Schiff of RPM Mortgage. When we cut to the third and final commercial break, we asked this trivia question. This actor played Edna Turnblad, the mother of Tracy, the main character in this 2007 musical Hairspray. Who was he?
Went a long way to be Edna's mom from Greece.
That's true.
So it was
John
Johnny
Travolta. That is
Indeed.
correct. Mark, what is going on with real estate? I know you got some good tidbits for us.
Well, yeah, you know, we like to do the story behind the story and the headline, you know, headlines, if it bleeds, it leads. Well, the headline for last week was that, you know, February home prices were down 4.5% year over year. Ooh, more bad real estate news. But, you know, that the news behind that is that depreciation, you know, devaluation of real estate largely happened last year. That was really the fourth quarter of 2011. There was a remarkable decrease in both demand and pricing. But that was it. That was the bottom of the market. I mean, we have seen month over month, January, February, into March, prices are actually going up. So the trend is today, prices are going up. In fact, everybody I talk to tells me that there is a lack of supply, a lack of inventory out there, and homes on the market right now are being listed and getting multiple offers above asking. I mean, I'm even seeing that in my own neighborhood in Nevada, where homes on the market last year at this time were languishing with no offers. Now, every home that goes on the market has a sale pending sign, literally within a week.
But they're priced right,
They're
though.
priced right.
They're
Yeah,
priced,
that's good,
well,
though.
they're priced correctly, but they're priced exactly where they were priced a year ago. That's the whole point.
And 20 years ago.
Yeah. So we've got, so most people are, or I should say many folks in the business are predicting that we've seen the bottom, that we are in a price recovery. The banks are helping by not releasing a lot of REO inventory right now, so they're, in many ways, they're trying to create a recovery, and so people might ask, well, what about all the shadow inventory out there? But, you know, I think that they've demonstrated, the banks have demonstrated that they have a plan.
Yeah, they're not just dumping it.
They're not gonna dump non-performing real estate assets on the market, so I don't foresee in my crystal ball, for as bright as that is, a triple dip. We had a dip in 09 and another dip in 11. I don't see another one forthcoming. I think we've learned the lessons of how to deal with this situation. And I think, I mean, real estate's still priced so far below replacement cost that I think we're pretty safe to bet, that is, at least in the short term, that we're probably, have hit bottom, and we're looking ahead to go, okay, now where do we go from here?
I certainly think the market's strong. The financing is as low as it's been in decades.
Oh, mortgage rates are great.
Mortgage rates are incredible, and people are getting loans at 3.5%, 4%. The FHA will go up to 96.5% of the purchase price.
Yep.
So people are able to buy a house that many times now, with 3.5% down, they're going to end up paying, after they pay their mortgage taxes and insurance and even mortgage insurance, their monthly costs will be less than the house they were renting before they
See,
bought.
that's amazing, because I still think that 3.5%, I'm going, isn't that kind of part of the problem we ran into? But the interest rates are a lot lower now than they were when.
Yeah, and talk about too big to fail. This is the federal government, so federal
little
housing
different.
authority, so that's really too big
Let's
to
turn this
fail.
over to Pete for a minute. Pete, you're still in the studio here. You were mentioning about the GDP.
Just a curious, another kind of trivia. Fed funds rate is at 0 to 1/4, and it topped out at 19% in 1981. Can you
Maybe
imagine
lost his
that?
mic.
That's amazing. Yeah, I think we did lose your mic there, but that's okay. Sorry
Oh,
about that.
sorry.
Don't know what happened there. But,
And that was when OPEC slammed down everything. So
yeah, oh, I remember.
Good,
You know what? I remember that a money market money market interest rates at the bank were at 16%.
16%. Yeah, when I was in college, that's where we were all putting our savings into Franklin Money Market Fund at 16%.
Well, even the bank,
Yeah.
a regular bank was paying that. I was thinking,
And the
why
rate
would-
of inflation was less than that, so. People,
Yeah,
I know people
yeah.
were buying real estate, getting mortgages. Mortgages, I mean, that was a little before 81, were less than the rate of inflation, so.
Well, we were kind of wondering, why would people buy CDs at 12% when you get a money market at 16? Well, because interest rates were about to plummet.
Mhm.
In fact, I remember the old MCI getting a current yield of 19% on their bond, and the yield to maturity was around 30%. It was ridiculous.
Hey, Robert, are you seeing, in terms of the applications in the banking industry right now, has underwriting, I've heard lots of complaints about underwriting being a lot tougher nowadays. Are you seeing any changes in that this year going, I mean, we know the interest rates are really, really compelling right now, but what about people looking who still have an opportunity maybe to refinance? What can they expect?
The underwriting is as difficult as it's ever been. It's an overreaction possibly to all the stuff that went on beforehand with the no income, no asset, the liar loans. The underwriting is very stringent, and still I think it's going to stay that way for quite a long time.
So if you can demonstrate your income and you can, prove, which is, I know in the Bay Area here, that's tough for a lot of people who are self-employed. So are you able to get self-employed folks refinances or purchase money loans?
Yeah, it's not a problem if you're working and you have enough income to qualify. It's just they should be prepared for a paper chase that's more time-consuming than it was when they didn't have to supply any.
What are timelines right now? How long is it taking to get a loan approved?
Well, RPM, I just did a deal where it was a purchase, and we promised a 20-day close. So from the time we took the application to close, it was 20 days. Now, that's not the normal. That's only for a purchase and only.
Sounds like a private money loan.
Yeah, that's right. Yeah, really. That's pretty good.
This
That
is a
is good.
straight 30-year loan, but normally through the bank, through RPM, it'll take about 45 days to be safe to get a loan done. We had a conference with Wells Fargo yesterday, and they said they're about 95 days in underwriting.
So are you getting a lot of requests for pre-approval, or people coming to you and getting pre-approved so they can go out and make offers on property?
Absolutely. If people are looking for property or thinking they want to make an offer to purchase, any offer to purchase almost surely has to be accompanied by a letter from a mortgage bank or mortgage broker, letting the real estate agent who is representing the seller know that that client already is pre-approved, that they've already been to someone who can qualify them for the loan they're trying to get.
So the key is to do that before you start.
That's the best
Awesome.
way to start financing.
All right, guys. Thank you very much, Peter. Thank you for joining us in the studio here. Here are our thoughts for the day. Get this. George Washington had to borrow money to go to his own inauguration. I guess that's where it all started. Now we're at what, $4 trillion? Right? Thank you, George Bow. And the shortest war in history was between Zanzibar and England in 1896. Zanzibar surrendered after 38 minutes. If only all the wars could be that short-lived. And with that, we invite you to tune in to next week to the Best of Investing. We're going to be giving away, how many? 9 more free vacations for answering trivia questions. Thanks for listening. On behalf of our team, I'm Edward Brown. We're wishing you the best of investing. So long.